Good morning, Paul Georgie from Allendale. It's November 1st, Friday morning. Grain markets overnight were quiet, although continuing to drift lower. The Dees corn making new lows of this move. January beans taking out key support areas. So we're looking at a start here on Friday of some negative bias to the futures markets at the Chicago Board of Trade. The news impacting this attitude is the good weather in Argentina and South America. It looks like we will continue to get some good growth and good start to the crops down there. That is combined with the higher yields that producers are telling us they're receiving in the corn harvest and soybean harvest is certainly a reason to see some pressure. Being Friday, we may see some hedge pressure here late in the day. The focus after the export sales report yesterday, now the focus turns to the USDA supply demand report that will come out on next Friday, November 8th. The yield estimates are expected to be higher. Allendale put out their numbers yesterday. 158.7 is our estimate on corn yield and 42.4 on soybean yield. The ending stocks estimates just under 2 billion bushel ending stocks on corn and 180 million bushel on soybeans. We do have other forecasters coming out with their estimates today. In Pharma comes out at around 10:30, and FC Stone after the market closes here this afternoon. The news with export business being a lot larger than what trade expected during this last 3-week period tells us that cheap prices does entice some demand, and with the large crop that we've got and the potential increase in ending stocks, it looks like we're going to need to buy some demand back, and that's the trend that we're on right now in the futures. We did have the Argentina attaché tell us that or he's putting corn production down there this year at 24 million metric tons versus 26 was his last estimate. Wheat production at 10.5 versus 12 million metric tons. Now that the wheat number is some of the reason why we're seeing some weakness in futures here at the Board of Trade is because the trade was expecting a much larger loss in wheat production than just 1.5 million tons. So we'll be dealing with that as we go through today and into next week. In the livestock trade, we had cattle on feed report yesterday. Very neutral. The marketings were a little less than, or a little greater than what the trade was expecting, so could be a little supportive to the nearby December contract. Cold storage also came out yesterday, and they had beef in storage for the month of September up 15 million pounds. That was larger than that was an increase from August and the largest beef supplies in storage that we've seen in 5 years. Pork cold storage numbers also increased about 17 million pounds. That is not unusual. The normal for pork in storage at this point in time, or the increase from 1 month to the next, is about 30 million pounds. So less pork in storage there. Continuing to see lower slaughter numbers in hogs. Looks like this week we're going to end up about 4% lower than a year ago, and compared that to the USDA numbers that we have to go with on their last report. We're about 5% below that target. So some discrepancies there that the market's dealing with, and therefore we're seeing higher prices in the pork complex. Beef cutout values were down slightly yesterday, 51 cents in choice, just 1 cent in select. Pork cutout values were up $1.42 yesterday. So the tight hog supplies, the light slaughter is certainly helping drive and support pork cutout values as we go forward. So a lot of things going on, and again, a reason to stay in touch with Allendale's research. If you got any questions, don't hesitate to give us a call. You can reach us at 800-262-7538. We wish everybody a very successful trading day. We'll talk to you on Monday morning. Thank you.